everybody. This is the end of another good weekend, the beginning of another great week coming ahead. Important data this week, CPI on Wednesday, the number we have all been waiting for. But first, let's take a look at what's happened, and then let's take a look at the chart to see if we can figure out where we're going. Last week, it was a pretty good week. It was almost flat for the week. We were almost flat. You could see that the top sectors were consumer discretionary, and technology did pretty good, and then followed by utilities. Utilities is down here. The worst performing sectors, of course, was energy right here. They just continue its downtrend, continue its slide. Healthcare was the second worst performing sector, and communication services didn't perform very good. They were the third worst sector, but they were flat for the week. They were down, or they were up 0.02. So it wasn't a terrible week for the market, but it wasn't a good week either. So you can see here for the week, we did hold the 20 period moving average on the weekly chart. That's always a good sign when we test those the moving averages. It had been working as resistance, and we broke over it, tested it for strength, and now we're going to see whether it's going to continue to act as support or if it's going to change to resistance. Currently, we are sitting with 30% bullish sentiment in the market, 38% bearish sentiment. You could see that there's gradually been more bulls as the weeks have gone on, and if you want to play the contrarian effect, you're stuck in the middle right now, because we're almost even at bulls and bears. Me personally, I'm neutral. I'm currently not bullish, and I'm currently not bearish. You could see that literally one third of participants on this survey are on the same boat as me. We want to see whether we break to the upside or break to the downside here. We're inside the zone that I have been looking for, and we're right in the middle of the zone. Closed the week in the middle of the zone. When you look at the VIX weekly risk range, we have an expected movement or a risk range of $6.31 to the upside or $6.31 to the downside. And where we're currently sitting, if we add 631, it puts us at the top of that range. And if we subtract 631, it puts us right at the bottom of that range. So we're currently just sitting in a range where we just don't. It's indecision time. You can see this structure over here. It had 8 candles before it made a decision. We are on candle number 6. Candle number 8 is on Tuesday, and Wednesday, the CPI reading, is likely going to be the day that we decide a direction, whether it be to the upside or the downside. The VIX volatility still keeps us inside this box, with max pains ranging from 409 on Monday to 405 on Friday. We are leaning more towards the downside when it comes to options activity. When it comes to people buying puts versus calls, there's still a little bit more leaning towards the downside. But it really is a wild guess at this point. It really truly is a wild guess. Now, the bear case I have been hearing is that we were in a 10-year bull run, and that bull run has ended, so we need to come down. Well, I don't agree with that sentiment. I don't necessarily agree with that, because when you look at the long-term chart, the stock market goes in cycles. It just always goes in cycles. During the 40s, we went up. During the 30s, we went sideways. During the 50s, we went up. During the 60s, we went down a little bit. So The best way to put it is there's the accumulation phase, the markup phase, the distribution phase, the markdown phase, and then we start over. It comes in 10-year cycles. We just finished a 10-year bull run cycle, or we're in a 10-year bull run cycle, whichever way you want to look at it. But you see this cycle right here from 2010 to 2020 is a markup cycle, just like from 1990 to 2000 was a markup cycle. Now, 2000 to 2010 was the only decade in stock market history that we had negative returns. It's the only, aside from the Great Depression, it was the only decade with negative returns. I like to look at history because when you look at it, the distribution phase could be confused as the accumulation phase. So the 1970s, there's accumulation. It doesn't mean the market's going to go down. It just means there might be a decade here or there where the market's not going to go up. Or what it means to me is that selling options is going to be the winner. That doesn't mean that we have to go down. It doesn't mean we have to crash. You could see most of these phases, there is no crash. Sometimes there is a recession, but there's no hard crash that makes it seem like we have to go down from here. I think that's a false narrative, and I think a lot of people are buying puts or playing the downside, and they're getting burnt. They're getting hurt because there is a phase in the market where it comes down really fast, but then it stops going down. And when you're in a bear market, the green candles are going to be bigger than the red candles. Just like when you're in a bull market, the red candles are going to be bigger than the green candles. That's just the way the market works in order to make you not feel like you don't know what you're doing. That's the basic strategy, is make you feel like you don't know what you're doing. Now, there's a bull case and a bear case for everything. The NASDAQ was the one that led the fall, and they are the ones that are leading the climb. They're leading as far as percentages, but they're not leading as far as how far we are off the top. The Dow is still the closest to the top than any other index. But let's look at the NASDAQ here, because it is in a very peculiar spot where it is the closest to breaking the trend line. You see this trend line right here, and we reached it, came back down to our support line, bounced up off that support line, and we have this nice little triangle right here. And Wednesday, we're going to be at the tip of that triangle. And when we get to that tip of that triangle, it's your guess, it's my guess. We could flip a coin. I won't play a position to anticipate which direction we're going to go. If we do go down, we're going to go back to this structure right here. This is probably that 294 area, 295 area is probably going to be the place where the NASDAQ is going to start getting some buyers to come and retest this trend line. If we do shoot up, it's going to be a significant movement to the upside. And I do think that the NASDAQ will start reaching the 330 area fairly quick, and then 350 before you start getting the bears coming back in and try to knock it down. Again, this is Wednesday. Wednesday's going to pick our direction. It's a pretty significant place. The Russell, it did break over the trend line, and if we do come down, I think we're only going to come down to retest the trend line before we move back up. But if CPI reading affects the market very negatively, then we could come back down to the 50-day moving average. But I would use 181 on the Russell to dictate whether we're going to continue up or down. Now, the one thing I wanted to point out on the SPY, you guys know that I like looking at history. Right here at 421.05, you have the 50% retracement line. Now, you can see here that the SPY has not broken the trend line. There's your trend line right there. And the SPY has a ways to go before it breaks that trend line. I would be bullish if we break over 421.05, the 50% retracement line. The reason for that is, and you guys have heard me on the HaiKhuu Discord. You've heard me say multiple times, I'm neutral as long as we're in this range between 407 and 420. I'm very neutral here. Historically, we could still make a new low. It is a midterm election year. During midterm election years, the low of the year comes in September, October. So if we break below 407, 409 is really my cutoff line. If we break below that 38.2 retracement line, then I do believe we're going to make a low of year. Because historically, that is what happens. The low of year on midterm election year comes in September, October. Now, look at the 14 recessions since 1950. When you look at the 14 recessions since 1950, anytime the S&P 500 crosses the 50% retracement line, it does not make a low of year. Let me repeat that. In the last 14 recessions, every time the S&P 500 has crossed over the 50% retracement line from the high, from the most recent high to the most recent low, when it crosses the 50%, it does not make a new low. We have not crossed that 50% retracement line, so a new low of year is still in the cards. But 421, if CPI is a good read and we close, not just touch it intraday, but if we close over 421.05, then that right there signals that the bottom is in. I will become a bull if 421.05 hits. If Wednesday comes around, CPI gets read, and we break below 407.13, I am a bear, because at that point, the fact that we didn't hit that 50% retracement line tells me the bottom is not in, and historical charts telling me that September, October is a low of year will still be accurate, and then I will continue to play the downside until we confirm a low of year by crossing that 50% retracement line. I know that a lot of people try to time the bottom, and I'm just telling you, I'm going to react to what gets read. I'm not going to play a position to anticipate CPI. When we have the reading, I will react. If we're under 407.13, I will play the downside. If we're over 421.05, I'll play the upside. And some of you will say, well, you're going to miss the movements between 410 and 420 and 410 and 400. And I'm not. I'll catch small scalps. I'll go in and out of positions. But I will not feel comfortable holding a position overnight, either direction, until it's either up under this line or above this line. Now, for those of you that are on the bear side, I do think, when I say I'm neutral, I do lean a little bit more towards the bear side. For one, the historical data tells us September, October is a low year. And two, if you look at this correlation between the 2-year yield and the S&P 500, you can see that as the S&P 500 has been going down, the 2-year yield has been going up. When the 2-year hit its peak on June 14th, just a few days later, the S&P 500 hit its bottom on June 16th. Now, the S&P has been slowly climbing, and the yields have been going sideways. But you could see here that on July 28th, the 2-year yield decided to bounce off of this support line. Here's your support line right here. And it just about came down to it. It made a higher low. And this was the low off the top. Came up, made a higher low, and it's continuing back up. A break off of that, a break off of where we closed on Friday, a break over that will signal to me that the yields are going to make a new high. And if the yields make a new high, the S&P 500 is going to continue back to the downside and not be able to reach that 50% retracement line. So though Monday and Tuesday are crucial when it comes to the yield, I don't believe a decision will be made until Wednesday. I will keep an eye on the bond market, because the bond market tends to be a better signal of which direction the overall money in the market is going to go. But I am eagerly awaiting the CPI read on Wednesday, and I do believe that when we have Wednesday come around the door, the market will pick a direction, will know which way to go, and I hope that you guys are on the correct side of the coin when that coin lands. In the meantime, have a fun time scalping, have a fun time going in and out of positions, being fast, being nimble, and I hope you can take my advice and don't try to anticipate which direction we're going to go. It's going to be volatile either direction. It will be a large move. The Bollinger Bands are telling me that it is going to be a large move whichever direction we pick. I hope this helps you out. Please remember, if you like the content, if you enjoy it, give us a thumbs up, share it with your friends, share it with your family. It helps us out on the HaiKhuu Discord when these videos get thumbs up, gets likes, gets new memberships, and it helps our community stay healthy. So again, give us a thumbs up and have a great weekend.